Hey, everyone, we're going to go ahead and get started. I think for some reason we have fewer people attending today than we have in the past. So we'll just go ahead and get started. It'll be a little bit more intimate than in the past, but no less exciting actually, because I'm proud to have my partner, Nick Cosmas, our CFO, join us today. And our intent with these webinars, every month that we have them is to show you one different angle or one little nuance of Trophy Point in the diamond that we are. So we try to show you a little facet of the business. And so, if you don't know me, and then there's actually two people I don't recognize on this call today, so that's great. I'm the managing partner, CEO of Trophy Point. I love real estate. It's what I've been doing pretty much my entire adult life. And I love helping people, actually. And in fact, I think not making mistakes or reducing errors in real estate is a much better angle or goal than trying to make money. There are other industries where you can double, triple your money within a few years. Real estate, in my opinion, is not that type of asset class. And I actually that kind of jives with my personal philosophy when it comes to building wealth. And I'm always here to help. If you've got a real estate question that you are wondering about, I'm always here to help. I hate to see people lose money. Mike Martin, called me back a while ago and asked me some questions about an apartment building that he was looking to buy. And it turned out, then I gave him some questions to ask his seller. And it turned out his seller was trying to sell him a building without unpermitted repairs or repairs that were not approved by the city or zoning council that he belonged to. And Mike would have been left holding the bag, trying to fix those mistakes had he actually bought that property. So I consider it a win, actually, when people come to us and realize that we can help them avoid mistakes or help them avoid losing money. So if you're not familiar with Trophy Point, and I see a couple of names that I don't recognize, I'll go through this real quick. We're like a private bank. We take your dollars, we give you a fixed return on it of 8 to 10%, 10.5% if you give us retirement dollars, and we lend it out at higher rates for folks that are flipping houses and buying commercial real estate or for-profit business purpose type of loans in the form of real estate backed collateral. We always have a senior lien. We always like to target experienced clients, so our default rate is typically pretty low. And me, Nick, and Dave, we have about $8 million of our own capital personally invested as well in the business, and we take the first loss on any bad decision that we make. And I think that has translated really well. Like, we have not lost investor capital at all. Out of the $100 million that we approximately manage of investor money, we have never had to take money out of an investor's account due to loss. So something is working for sure. In terms of what we offer, just to give you a quick comparison, in terms of the fixed income or yield or high yield asset classes that are available to you, our offering, I think, is the better one out there compared to REITs, treasuries, high yield stocks, and emerging debt. I mean, only treasuries is the only guaranteed one out of this list in terms of risk, right? Now, we'll see what happens with the US government and their budget, but it's highly unlikely that the federal government will default on their treasuries that they issue. Take it for what it's worth. But REITs, stocks, emerging debt, those are all volatile asset classes. Those all could still lose money. And Trophy Point's yield surpasses that to a much greater extent. In terms of our offerings, these are what we offer. I won't brief the whole thing, but there's standard investments, which are basically, an individual's account or your business account even. And then there's retirement accounts, which you must use typically a self-directed IRA through a custodian. We pay higher for the custodians or for the retirement accounts because the likelihood of you redeeming is lower. I'll go ahead and say it. I'll go ahead and just say it. And I think also offering a 10% compounded ability for your retirement dollars in a low risk manner that we do at Trophy Point is a great way to just steadily grow your wealth without the volatility. So typically we lock up your money for 18 months, and then after that, give us 90 days notice, and then we'll return your money thereafter. What we're really excited about to present, I noticed one existing investor is on the call today, is our liquid note program. And right now it's only available to existing investors But at some point in the future, in 2026, we will roll that out probably more broadly. But the liquid note program was developed as a response based on your feedback, based on investor feedback, seeking a highly liquid product where it's not locked up for 18 months, where you don't have to wait 90 days to get your money back. With our program, with the liquid note program, basically it's only locked up for 31 days. Or even after you pass the first 31 days, we can always return it back to you within 31 days. So it's pretty liquid, and you earn 7% on that, which is great for those that have to have working capital reserves. So business owners that need to keep cash set aside for a big purchase or a big obligation later in time. We're happy to hold your money and give you 7% on that. It's also great for individuals who are saving up for a big purchase or a tax bill later on, right? Many of our investors that have taken us up on this are actually investors that are setting aside cash for their tax payment that they're going to have to make pretty soon, and earning 7% on it, whereas CDs and checking accounts are earning not as much, 1%, 2%, maybe 3%. The 7% program is still pretty compelling in that regard. The reason why we do it, if you're curious, is that we keep a lot of cash on hand at all times. And that's just the nature of our business, because loans are going in and out, and Nick will tell you more about it pretty soon. But loans are always coming in and out of our account, and we always have to maintain a decent cash balance. And so this money, the 7% liquid note money, is literally just cash sitting in the bank on a very, very short-term basis for us, because we have millions of dollars trading hands, and Nick will tell you about that shortly as well. So the purpose of today's chat today is twofold. One is to talk about loan closings and talk about what happens when we actually close a loan and why we do things the way we do it, to give you some color on that. But more than that, I also wanted to introduce you to Nick Cosmas, our CFO. You don't necessarily get to hear from him as often as you do from me. And it's important to me that you get to see the rest of the team, because it is definitely not the Samir Patel show. It is run by great people like Nick. And he and I have been friends, partners for 10 plus years as well. And so Nick is also my West Point classmate, and he's our CFO, managing our entire balance sheet, $100 million balance sheet, which when Nick and I first got started, it was a $10,000 balance sheet, and our first loan was a $70,000 loan back in August of 2020. So we've come a long way, and we've learned a lot through that process. And I don't want to steal Nick's thunder, but Nick's philosophy around customer service and operational excellence is a major reason why we have grown the way we have grown in the manner that we've grown. And I hope Nick will take a few minutes to talk about that. But Nick, like myself, Nick serves in the Army Reserves, and he has a very strong academic background. He taught at West Point. He's got 2 master's degrees, one in engineering, one in geography as well. And he also speaks a second language, or third or fourth language, actually, due to his Army duties as well. So he's a well-rounded individual. And what I appreciate about Nick more than anything else is that he has a high attention to detail and a high attention to the numbers to make sure that we're always headed in the right direction with the balance sheet. So that being said, Nick, I'd love to introduce you. Thanks for joining us today, and I'll kick it over to you.
Sure. Yeah. Hey, thanks, Samir. I appreciate it. Yeah, and thanks for everyone taking your lunch hour to join us today. It's great to see some names on the screen that I recognize from looking at our balance sheet on a daily, hourly basis, as I do. So as Samir mentioned, he and I have worked together for, been friends for 20 years, and worked together for over 10 years. And, when we started, this was, just a couple of us, just Samir and me and a couple other partners. But over the last couple of years, we've grown the team as we've sought to operationalize every facet of our business. So you can see on the screen, who the faces are that are ensuring that, every single day we are maintaining our fiduciary duty to the dollars that we're holding on to. So the team that I manage is doing the books and also providing customer service for all of our existing clients to whom we're lending money. So we've gone from 3 of us to over 40 now. And we're really proud of the work that our team is doing. And as I share with the team every day, we just our job is pretty simple. We're just doing routine things routinely. day in, day out. And as we do, try to get 1% better every single day. So we go to the next slide, sir.
Sure.
So, since our fund formally started about 5 years ago, we have originated over $250 million in loans. So that's investor dollars that have gone out the door to fund fix and flip or bridge loans for our clients. That equates to over 1,200 individual loans. And as we like to say here at Trophy Point, anyone can send money out the door. It's the skill is really in getting it back. And so we're proud to say that we've gotten about $170 million back of the 270 or so that we've sent out the door. And the remaining 100 million, they remain on our balance sheet, and those are being serviced, being paid off every single day. We go to the next slide. So how do we do that? Well, it's really thanks to you all here on the call, and 200 other individual investors who've entrusted us with their money. So that's 200 unique folks, some of whom have 1 or 2 or 3 accounts. They may have a personal account, may have a business account with us. They may have an IRA or a 401k with us. But we have over 200 of those folks that are on this journey with us. Last quarter, we paid, or actually, last month we paid about $715,000 in interest to our debenture investors. And that helps to those dollars that we're sending out the door are repayment for the portion of the loans that are funded by our investors. And you can see on the screen we got $113 million approximately in active loans as of the end of October. And so one thing to note there, 408 loans making up $113 million. Our loan size is pretty small, and we do this intentionally. Whereas other funds like us, they will seek to grow their balance sheet by increasing the size of the individual loans. We've actually taken somewhat of an opposite approach, and we focus on smaller loans because in our mind that diversifies the risk for us and for you as the investor, rather than have a single $100 million loan like some giant office building in Manhattan. This is spread across 408 different what I call risk units. So those are individual loans that are spread across the country. So a $100 million skyscraper in Manhattan might have poor occupancy, and we as the bank would have to take it back. In our case, with 400 different loans or unique loans, 400 of our borrowers would have to default for us to really see an impact. So that speaks to the safety of the fund. You can see also on the screen kind of how our trajectory is looking. So the darker bar graph on the right there is the loans that have been paid back. The lighter one is the loans we've made. So you can see kind of growth over time on our loans being paid back, and the trajectory of our loans that we're making as well. So we are moving up, in increasing volume at a pretty steady pace. So in previous conversations that you all might have joined, you've seen some graphs over time, and our trajectory is growing. Our problem today is that not enough people know about Trophy Point on the borrower side. So as we continue to raise more investor dollars, our task then is to deploy it, and we do that by getting our name out there, going to industry events and things like that. Go to the next slide. But why? Once people know about us, what is it that attracts them to us? How are we unique? Well, in my mind, the most important thing that we can do is be responsive and have a customer focus, and that's why our borrowers come back to us. 2 out of every 3 borrowers who come to us for a single loan will come back to us again. We control the capital, right? The trust that you as an investor place with us, the managers of the fund, allows us to control this capital in a different way than another Wall Street backed lender might. We can deploy money quickly. Samir mentioned that we have a lot of that we're now raising what we call liquid notes. We have to keep a lot of cash on the sidelines, not earning interest. So we don't earn anything on the money that you give us unless we deploy it. But at the same time, we need to be there for rapid closings. Other lenders might fail. There might be a really good opportunity to buy at a discount, but we can't offer that service to our clients unless we have cash sitting in reserve. And so that's how that cash sitting in reserve is how we deliver the speed that our customers, our clients demand. And we offer flexibility. It kind of goes back to our source of capital, which is you as investors, the trust that you place in us. We are granted the ability to make a prudent decision that's risk weighted to ensure that we can get deals done for our clients. You can see some feedback on the screen here from a few of our satisfied clients. Really, the summary on that is that we do what we say we do for both investors, deliver consistent returns to investors and also to borrowers. We deliver a speedy, comprehensive lending product that few others out there in the industry provide. So that's really the kind of crux of why folks come back to us. And then in terms of safety, right? So we deploy the money, but what makes it safe? It's this very detailed process that our team undertakes when we make a loan. We're basically compressing a bank's 30 to 45 or 60-day timeline down to generally about 10 to 14 days. And so how do we do that? Well, we have a lot of repetitions. So everyone on our team, is very experienced. They know exactly what the checklist says. It's like taking off, an airplane. Every single time we ask for the same set of documents. We a separate underwriting team that is adversarial. They will review those documents that we collect, and they'll say, "Oh no, we have an issue with an expired driver's license, or an operating agreement that indicates one person can sign but other can't." So we have a strong process all the way through signing of our loan documents that ensure that we have a valid security interest in every loan that we underwrite. We file those with the counties and then ensure that we're getting those valid liens, the security instruments, back to us in a timely manner, so that in the event of a default on our loan, or someone maybe trying to file a claim with a title insurance provider, we have the first and superior interest in a property. And that I can't really emphasize that enough. And that's what makes us different. It makes a mortgage-based fund like ours different from other types of asset classes. It's that security that it underpins a real estate transaction. The United States is different than a lot of other countries in that we really uphold property rights and the rights of creditors. And that's really a testament to the strength of the laws of the United States. And we ensure that we are getting a proper legal claim to every single loan that we're making. And Nick,
I'll just add something to this. Is a lot of people have asked us, like, why do me, Nick, and Dave have so much capital involved in Trophy Point, and why are we willing to take the first loss? Well, think about it. If you think about it, it's a risk I think Nick and Dave and I are willing to take, because we always have tangible property. We all have the rights to tangible property should something go wrong. So the likelihood of us losing all of the money is really extremely, extremely low, because we always have something to take hold of, such as a house. We foreclose on it, or we get a deed back to us, and then we may fix it up and sell it. In many cases, we've actually made money on foreclosing on a property through our lien efforts. And if we do have to take a haircut, we do take the haircut. Me, Nick, and Dave will take the haircut. But it's okay, because one, we have liens. We're always going to have tangible property. There's always going to have value. The real estate's always going to have value. And two, to Nick's earlier point, we have 400 loans across the country. So the idea that any 2, 3, 4, 5 loans will sink us as a fund, we don't have to worry about that. And that's why we're willing to put our money up in a first loss position in the first place.
Yeah. Thanks, Samir. Appreciate it.
But I don't want to understate what Nick does, because it sounds simple to put liens on properties, and generally it is. I mean, on one hand, all you have to do is tell the lawyer to file a security agreement, and the borrower signs it, and the lien can be filed. But when you're doing business purpose lending and there are so many loans, what Nick has done is he's built a machine, he's built an engine, or even a manufacturing process, if you want to look at it that way, where there's like different silos, and his team, as big as it is, because they're handling 30, 40 loans a month, and ensuring that, you know, the I's are dotted and the T's are crossed. Because, you know, maintaining liens and having valid liens is the crux of our business at the end of the day. And it is a risk, right? If we get it wrong, if we screw up the lien somehow, the good news is that we often have title insurance to backfill any mistakes we might make. And then if the lawyer screws up, we can always go after the lawyer's E&O policies as well to ensure that we always get made whole. So we've got also layers of safety and mitigation in this process. So I'd like to open it up for questions. There is a Q&A button at the bottom of your Zoom bar, or you can also use the chat button if it works for you. Sometimes it doesn't work for attendees, but we usually like to keep these webinars at 30 to 45 minutes maximum anyway. And we're coming up on the 30-minute, 25-minute mark. So please toss in your questions, especially if you're new. There's a few names I do not recognize, actually. 3 names, actually, I don't recognize. Rachna, good to see you. So I'd love to hear from you. I'd love to hear your questions. Nick and I are standing by. Looks like we got one question. 1 second. Let me pull it up. So Tim has a question. How do you advertise to potential clients nationwide? Nick, would you like to answer that?
Sure. Yeah. Great question, Tim. So I'll share, a couple things. First, up to now, we have actually not advertised. We have been operating for about 5 years, almost strictly on word of mouth. Our budget for advertising and marketing is incredibly low by industry standards. What we've done up to this point is we have just provided excellent customer service and used that as our means of marketing. So that means probably additional teammates that we've brought on board to ensure that we have a seamless experience for our clients. And that has proven successful for us up to now. And the next phase of Trophy Point 2.0 or 3.0 is getting our sales team in person at events where the real estate investors that we want to lend to, we want our sales team out with them. And that looks like small Facebook groups in the geographies that we want to lend in. That looks like in-person meetups, at in a particular market, and maybe it's 10, 15, 20 high quality volume borrowers who they're really professionals and know exactly what they're doing. And so that's really our marketing pitch. We're not, you're never going to see a Trophy Point billboard on the highway. You're never going to see an advertisement on, during, the Super Bowl, with Trophy Point. You're never going to see, we're not going to be at the top of, a search for, hard money lending nationwide. What you will find is a really strong ground game. And we're going to continue that and ensure that every single one of our loans turns into a referral, because in that transaction, every single loan, we have a buyer, a seller, 2 or more real estate agents, a title company, maybe two title companies or attorneys, and where you have insurance agents, and every single one of them is going to be wowed with the customer service that our team delivers. And then that will translate into additional lending opportunities for Trophy Point. And we know that this has proven successful for us in the past. And now as our sales team goes out to strengthen our ground game, every single one of our loans is going to turn into 2 or 3 more.
Great, Nick. Another question from Gary. Gary asks, do you work with brokers or have a broker network?
Yeah, good question. So brokers are an interesting topic in this industry. They obviously provide a great deal of deal flow, and that is a positive thing. And I think that the challenge for Trophy Point in any lender is kind of separating the wheat from the chaff. Brokers generally really know the industry well, the lending industry. They know the strengths and weaknesses of their borrowers and the loans themselves. And in general, brokers know the strengths and the weaknesses of every lender, the types of products they offer, the speed, the leverage, all of the factors of the loans, the strength of the underwriting. And they really generally understand the rules that everyone abides by. And sometimes what we find is that we've got really solid brokers that give us high quality deals. They vet each of their borrowers, each of the loans, and only give us the best loans. Unfortunately, sometimes we do get brokers who bring us the chaff rather than the wheat, and that's the job for our underwriting team. What sometimes occurs with brokers is that they may get rejected from 2 or 3 or 4 other lenders, and use that as feedback to change or restructure a deal. And so I'll end with this piece on brokers, is that we do appreciate when brokers come to us with deals. We are extra skeptical also when brokers come to us, because what we want to, while we'd like to believe that every broker is acting as a fiduciary for both the lender and the borrower, we know that's not always the case. And sometimes they want to manipulate things. And so we appreciate getting referrals and getting deal inflows from brokers, but we always double, triple, quadruple check any loans and loan requests that brokers bring us. Hopefully that answers your question.
Yeah, Nick, I'll just add one thing. So we do work, to answer the question, we do work with brokers, but we're very selective in that regard. I think Nick gave a fantastic and very complete answer on the challenges that both sides face. And one of the things about Trophy Point, because we are so I wouldn't say risk averse, but we are so focused on risk management, we have a strong desire to speak with borrowers. Nick, Dave, and we can talk to a borrower and tell you if it's a good deal or not, probably in 3 minutes of a conversation. And that is a good thing, because that allows everyone to save time in terms of like what we think will work, what it may not work for the borrower. It may be a risk that we don't want to take. And in many cases, we may be doing the borrower or the client a service or a favor by getting them to avoid a bad deal in the first place. That being said, many brokers like to not allow us to speak with their clients directly, and we're okay with that in some cases, but in most cases, we have a strong penchant for at least speaking with the client or the borrower up front. And I think it's and we don't mind brokers joining the phone call, and they have in many cases, but some brokers have a challenge with that. And our philosophy is, look, we're trying to make sure everybody wins in this case, and risk management is the best policy for us. And so that's one of the things that make us a little less broker friendly, quote unquote. And I don't think that's going to change, but many brokers that do work with us successfully find our approach a breath of fresh air, because we save them so much time on the back end, and they don't have to keep doing we ask them a question and they have to go back to the client, ask them a question, the client has to tell them the answer, then the broker has to come back to us, with their answer. And that's like 6 interactions that have to happen for a simple question that could occur within 2 interactions. So we're not about, creating more work for ourselves. But I appreciate the question. Let's see here. So I think we're going to wrap it up unless there's more questions or comments. Thank you guys so much for joining. Fordham, great to see you. I think you're joined us a little late, but that's great. Great to see you. This is what we offer. We're a great place for your money in a safer manner. Excellent for compounding on a long-term basis. And then our liquid note, I recommend you check us out or have a conversation with myself, Max, or Danielle on our new liquid note program. We're most excited about this because out of our hundreds of investors, many have asked for this independently of each other. And I'm glad the team could come up with something that I think works for the investor and also helps Trophy Point be a more responsible lender at the same time. So we'll give it one more minute for additional questions, or 10 seconds rather, for any more questions. Nick, thank you so much for joining us. I know you're busy, and I appreciate you taking your lunch hour as well for joining us. You guys have no idea how busy Nick can get. I mean, borrowers sometimes come to us with loan closing requests in 3 to 6 days, and Nick's team makes it happen. Now, responsibly, of course, but if title search has already been completed and the documentation's already in place, Nick's team will make it happen. But that often means Nick can't go to the bathroom during the day. So his time is extremely valuable, and I'm so glad he could join us and give you some color on how we do things around here. Seeing that there are no more questions, thank you guys so much for joining. We're going to sign off, and I hope you have a great weekend. Thank you so much.
Thanks.